Welcome to today's live. I am having a bit of technical difficulties today, so bear with me, but I promise this one is going to be a good one. I have a special guest today, and I'm sending right now. So you're being added, Paul. So let's see. Hopefully this works this time. That's progress. That's progress. We're getting to a next level. Yay!
Hello, Ronica.
Hello, hello, hello. I am so glad that we're able to connect here after I guess you just have to keep trying, right?
Yes,
Awesome, awesome. Thanks for joining. Are you on your phone now or computer?
on my phone.
On your phone. Awesome, awesome. All right, we can go ahead and get started. We're both upright, so none of us we're not upside down. So I think that we should be good for this recording. As I said, thanks for joining today's live. I am Ronica. If you're catching if you're catching this video for the first time, I am a CPA and I help my clients to save a lot of money on their taxes using tax planning strategies. For today, we're not going to be talking about taxes. We're going to be talking about getting your business ready for sale. And I think at some point in time, if you have this in mind that do I have a business that I can sell, or you may be thinking if it's possible for you to sell your business, then this information is for you, or even if you're getting ready to sell your business. Paul is a CPA, but his specialty is completely different than the CPAs that you're used to. He works as a CFO with small and mid-sized business owners, and one of his specialties also helping them to exit their business. And whether you're planning to sell your business this year or 10, 20 years down the road, I think this information will be really important, because when we Paul and I connected and we spoke, one of the big problems is that business owners wait until too late before they start getting their business ready for sale. So they basically don't get the value. So Paul, let me go ahead and let you introduce yourself, and then we can go ahead and get started with getting your business ready for sale. How are you today?
Ronica, I'm doing very well. Thank you for having me on. I appreciate you having me here. And my name is Paul Evangelist. I'm a partner with B2B CFO. We help business owners manage and grow their businesses from a strategic and holistic viewpoint, as well as the financial. And then when they're looking to sell, we help them get their business ready for that.
Awesome. And I know that, a lot of people may be wondering, from a CFO standpoint, like what is it to be a CFO, for a business? And basically at what point do you think, a business will need a CFO?
Right. When you think about when you start a business, if it's usually just you starting out, and then as you go, you start adding people. And then one of the things we talk about, in fact, it's in one of the books that our founding member wrote, B2B, it's going to come in backwards, I see that, but that's
Just
okay.
a little backwards.
Yep, so it's called Avoiding the Danger Zone, and you can find that on Amazon. But we talk about the finders, minders, grinders. And so what happens is, as a business owner, we start to want to do everything. What we should, though, is be the finder. We should be the one going out there driving the business forward, growing the business. What we find is that the business owners end up meddling down in the minders, which is like your back office, accounting, AR, HT, IT, and all that. And then they also get into the grinders, which are the actual workers doing the work.
Right.
And we need the business owner focused on the business. So as they get going, they wear many hats, but then as the business is growing, they got to start passing that off. And so they'll bring in a bookkeeper for the accounting side. They might farm out IT or do stuff with that, and HR and legal. And as they get bigger, they need all of that. And then at some point, they're going to need a controller to manage the numbers and take care of a lot of the administrative stuff that goes on. And then as they get a little bit bigger than that, they want a CFO, but they can't afford a full-time CFO. So that's where the part-time CFOs, fractional CFOs, name it, whatever you want to call it, they come in and they can provide help to the business owner. B2B CFO is a lot more strategic than that. We want to take a big holistic viewpoint of everything and just help the business owner get to where they need to be. We'll walk them through a process of where they're at currently and where they want to get to, and then what are all the barriers in the way, and then we'll move those barriers for them to get them to grow their
To grow
business.
their business. Wonderful. And let's talk about revenue. At what revenue point do you think that them thinking about having a CFO? So is it a revenue, or is what type of issues they may be having to add your type of expertise?
Well, yeah, the answer is probably it depends, which is a very familiar CPA answer.
I
But
know.
but really, it really does. It's how fast are you growing, how profitable are you, and what can be done for the most value that you're looking for. The CFO services provide a lot of value, but they do come at a cost that you're going to have to be able to afford. So if you're just treading water or something like that, and you're only, let's say, 500,000 or $1 million, it might be too small for you. But if you're 500,000 or $1 million, and you're bringing 200,000 to the bottom line, then I would bring in the CFO and help you to grow that even more. So it all depends. Our sweet spot, what we usually work with, are clients that are 3 million to 50 million, so kind of that lower middle market.
In revenue.
Right. But it can work with anyone,
Right.
any company. Yep.
All right, awesome. And then, I remember when we were talking about, business owners that are getting ready to sell their business, at what point should a business owner be thinking about this?
Yes. So usually what happens is, you know what, I'm tired of this. I just want to sell. And they find the first buyer, and they think it's almost like your house. You think your house is going to sell for X, and then it turns out it's something less than X that the people are willing to pay for. So business is like that, but a little bit more of a discrepancy between what a business owner really feels that business is worth, and then what somebody willing to pay for it comes in and offers for the business. So you really want to start maybe 3 to 5 years out from when you're thinking of selling the business. When we sit down with a business owner, that's one of the questions we ask. 7 Habits of Highly Effective People, written by Stephen Covey.
Oh, yeah, I love that book.
So, yep. So number one habit is be proactive, and the second one is begin with the end in mind. And so that's what we'll do with the business owner. We'll get them to be proactive and have them focus on what the ending is going to look like. Now, just like in any planning, nothing ever seems to come exactly the way you planned, but you got to have a plan. And so what is the end goal with your business? Is it to retire? Is it to sell and start another business? Is it to die at your desk? All right. We have people that say that. So whatever the answer is, it's okay. It's your answer. It's your business. But let's make sure we're doing the best we can for you, your business, your loved ones, your employees, while that's all happening. And the best time to do that is 3 to 5 years prior to when you want to sell.
So you hear that 3 to 5 years. I know that I've gotten, those questions as well that, how much is my business worth? And I'm like thinking, oh my gosh, I'm not into valuation, but how much, if I sell my business, how much would someone, pay it? And, these are even sometimes early business owners that they're thinking that, maybe, I would exit this business. So from a valuation standpoint, how much can I know this is probably going to be depends, but, what are some of the direction points that, a business owner thanks for joining, Mike, can basically start thinking about from a valuation standpoint for the business? Like, how much money can they get based on their business type and other factors?
Right, so a lot does go into that. And what you want to do is get ready. You want to have a success team led by a team manager. In our case, we would want it to be a B2B CFO partner that helps you bring everything together. When I talk about a success team, I'm talking about your tax accountant, your CPA, your financial advisor, your lawyer, right? Your insurance agents, HR, IT, whatever else is involved with that business, so that we can make sure that we can gather all the right information and have it ready for a buyer. And then while we're gathering that information, if there's something that we see that needs to be tweaked in order to get you more value, then we're going to go ahead and do that too. Because anytime you can spend, say, $5,000 and it's going to bring in $50,000, that's a real nice investment. So
Exactly.
we'll be looking at that because the two ways to really increase the value of your business is to increase your earnings, right, and your net profit, or the way the accountants call it is EBITDA, earnings before interest, taxes, depreciation, and amortization. But you can call it net income if you're not a finance person. And then the other way is to increase the multiple that you can get for your business. Usually the higher the multiple, the less risky it is of a business for a new buyer to come in and take over. So that's different by industry, and it's also different by each company. Because you might have the exact two same companies, exact same revenues, exact same net income, but one's doing everything by hand and on paper, and the other one is very technology
Technology
involved,
processes and so
right?
forth.
And so probably less risky for a new buyer coming in to buy this technology company as opposed to the hand and paper company. And so they'll get more money for the sale of the company. So it's it depends, unfortunately, but you need to go and find that out to see what will be the true value when you go to sell it.
I think that, when I mentioned this before, that when we had first connected, and even I have people call me asking me this as well, because they're ready to exit their business this year, and they want to start having clean financials because somehow they're ready to sell their business and someone asks for their finances. And I think at this point, the minimum that they'll probably lose is just how much they can sell their business for, right? So without this planning that you're talking about, they're basically going to lose in value of what they can sell, right? Is that like the worst case scenario for them?
Pretty much. It would be like, your house is a mess. It's cluttered. There's holes in the wall. Doors are broken, whatever it is. And you want to sell the house right away. Well, somebody coming in has to make all those repairs and spend money, right? So they're going to reduce the price that you're asking. Whereas if you take the time and spend a little bit of money to fix it up, now all of a sudden the value goes up. And you're into the fair market value of houses in that neighborhood for that square footage and outside curb appeal and everything like that. And now you're playing the right game. Whereas if you got to sell, and you kind of see that in like the foreclosure market, let's say in the real estate world, they're going to get less money than somebody that's just selling their house because they want to maybe move somewhere else in the next 6 months, and there's no rush to get it done. So that's why we always want to have that time frame. Could you go to 2 years? Sure, you could go to 2 years. It's just going to take more effort initially to get it up and running than it would if we do on a 3 to 5 year time frame.
Awesome. So since you spend time, we spend time to grow our businesses, and what I can hear from Paul, process is important. You focus on being the finder and stop being the minders and the grinders. And the grinders. So,
Right.
to start, seeing yourself as a CEO, start thinking about your business as an actual asset. And
Right.
get expertise, like a CFO, if you're positioning yourself to sell your business at some point so that you can be on that track to get the highest value for what your business is worth. And then also getting the right team. I hear you mention your tax person, of course, because we have to get the taxes closed out correctly, and whatever tax impact the sale is going to have. Your insurance person, your attorney, and who else did you mention? I don't
Financial
remember.
advisor
Your
will be
financial
key.
advisor, and everyone, to make sure that you're fully covered before you're about to sell. Anything else? Did I miss anything else? And
Yeah,
get maximum value. Net
exactly.
income and your revenue is extremely important.
Right. You can throw your commercial banker in there. You know, if you're having a business broker, or if you're bigger, you might have the mergers and acquisition company trying to sell the business. You know, we want to partner with all of them to make sure everybody understands exactly what the business owner wants, and then we all work towards that goal.
I guess my final question is when you look at business owners who are in the professional service field, what about I guess the type of clients they have in their portfolio? Would that also help to increase value? Or what about the type of clients? Like how would a prospect basically see if you have like terrible clients or really good high?
Right.
I
So
know
that's
I may
one
be
of the
getting in some hot water here, but you know, how do they test the risk of if your clients are problem clients or, you know, good clients for them?
right, right. So, you know, you would at some point, you know, with having them sign the confidentiality agreements and non-disclosure agreements, they will ask for your client base, right? Um, Initially, you want to just give it to them in a summary form. For example, if I'm if I'm a professional services company and I just have one client, they're 100% of my revenue, that's going to be a problem for a buyer,
That's gonna
right?
exactly, yeah.
Right. Whereas I have 100 clients and they're each 1% of my revenue. A buyer's going to like that, right? Because there's, you know, once again, it's lower risk. If you have one client leave, you go to 99% revenue. If you have, on the other side, if you have that one client leave, you go from 100% to zero. So the risk there is a lot less when you have a diverse clientele.
Right.
Right. Um, Now, let's say one of your clients is a well-known, well-respected company in town, and they're 30% of your revenue. Well, that's going to still be probably okay because of who the client is. Now, let's say it's, you know, maybe a wishy-washy type person. The strategic side is say, you know, hey, I don't want to give away names of my clients, you know, you know, but here's the percentages of you know, who the clients are. This client makes up 30% of my revenue. These other ones make up the other percent. But if you do have to go down that route, then the whole goal, of course, is to make sure that that one major client is going to be comfortable with the new company coming in to purchase. So
Awesome.
you'll have to make that disclosure at some point.
Okay, wonderful. So, and then whatever reason why you're thinking about selling your business, that, you know, really doesn't matter, is for you to have, I guess, the correct information to be able to get the maximum value. Anything else, Paul?
Yeah, and you know, a lot of times it's hard to think about this when you're the owner because you know you're in it.
Yes,
And so
yes,
that's why it's good to have third-party people looking at it also, because you're not going to really look at it from the buyer's side and what the buyer is going to want. We know what the seller wants, but
exactly.
what does the buyer want? And so you'll have these other people coming in to tell you, you know, this is what they're going to be looking for, so let's be prepared for that. And that's what we do at B2B CFO. We help you understand what the buyer is going to want and then the best way to present it to them. So a buyer is basically at your disposal there to make those questions of the company. And then how do you respond as the owner is going to be the main way that you're going to get this transaction to go through. So everything that you can have ready beforehand instead of making quick decisions, the better it will be for you. You know, it's kind of like being on the stand in a trial, and you always want to know what the questions are going to be and be prepared to answer those questions before
Exactly,
you get
exactly, exactly,
sidetracked with, oh boy, I didn't expect that. I better answer this way, and then you find out later, yeah, I shouldn't have said that.
exactly.
So, you know, it's always about being prepared. So, so that's what we like to do when we come in with a business owner. We want them to get relaxed, understand the process, and then just let the process happen. And they can just keep driving the business forward. What we find is you can go on Amazon and buy our book that we have. It's called the Exit Strategy Handbook. And you can buy that book for, say, $25 and do it yourself. But what we find is if an owner tries to do it themselves, they're not focusing on the business. We know the saying, you got to be on your business, not in your business.
Yeah,
So if you're trying to sell the business and not taking care of the business is going to go down. Your revenues will go down, your profits will go down. So it's better to have somebody come in and handle this for you and just keep you on track. We also have proprietary software that the business owner can look at and kind of track where they're at. It goes along with everything in the book. It'll show you, who's in charge of doing what, and then when's their deadline, and then are they on track or not. And then we also track the value of the company within that too. We'll be tracking your EBITDA, and we'll be tracking your multiple.
Awesome, awesome. I couldn't imagine anyone trying to attempt to sell their business themselves, but we have a lot of jack of all trades out there. But anyways, where can people get more information?
Well, with B2B CFO, I mean, if you want, you can go to my website. It's Paul Evangelist at b2bcfo.com. We also have our national website, which is b2bcfo.com. If you're interested in the exit strategy demo that we have, the software, you can go to b2bexitdemo.com. Like I mentioned, we have the books on Amazon that you can look at, the Exit Strategy Handbook and Avoiding the Danger Zone. And if you want, you can email me, Paul Evangelist at b2bcfo.com.
Wonderful. Thank you so much. So if you're planning to sell your business, or you want to develop an exit strategy, or if you need a CFO in your business, then Paul Evangelist is the expertise that will help you. Thank you so much for providing this information, Paul. Thank you for joining today.
I appreciate it so much, Veronica. And our goal is to make sure that the business owners understand what they're going through, because just like everyone, we don't know what we don't know.
We don't know what we don't know. Exactly.
Yep.
Yes,
Yep.
That's a great closing point.
So what we can do to help, we'd be happy to see what we can do.
Wonderful. Thank you so much. And you enjoy your weekend.
Thank you, Veronica. You too.
Take care.
Great seeing
Bye.
you. Bye-bye.